the timing is right. So I see Justin here, and I guess we can just kick this off. Hi, David. Great. So basically, we can start. First of all, hey Rin, hey Justin, hey David, and we are absolutely thrilled to have you here. So we've been planning this webinar for, I guess, quite a while now. After all these, long discussions in Slack, it's amazing to finally see your faces here and to bring this partnership to life. So, how everyone's doing? How is it going?
Yeah, likewise. Super happy to be here. I know we've been discussing a lot and talking over Slack, but again, good to put a face to a name. Talking about crypto taxes. We're here in the middle of tax season.
Yeah, great. So before we dive in, actually, I wanted to set the stage for our listeners and those who watching the replay. I am Vito, head of BD in CoinRabbit. So basically, I want to give a shout out to Iran, our CMO, who is also here today. And we're thrilled here to have our heavy hitter from Summ, is Justin Zanardi, who is certified public accountant and products and GDM lead at Summ. So, Justin, welcome. Could you please just introduce yourself, share a bit about your background, and maybe tell us how did you even end up in this industry?
Yeah, happy to do so. Thanks for the introduction. Again, my name is Justin. I'm a CPA licensed in California. I'm the product and go-to-market lead at Summ. I started my accounting career at Ernst & Young, which is one of the big four accounting firms. Kind of a meat grinder is what a lot of people in the accounting industry call it. So I started in financial statement audits, so completely different from tax, completely different from crypto. But I personally have held crypto since 2017. So I've done a lot of the more complicated stuff like trading bots, liquidity providing, things of that nature. And so when I, really kicked off my career, I didn't have time to handle a lot of the, DeFi transactions and all the tax implications that come with it. So I kind of put that aside to focus on, on my job. Fast forward a couple of years while I was at EY, I got reached out to help kind of build a crypto-focused accounting firm, to leverage my audit experience, that forensic mindset, along with my crypto experience. So as the founding employee, I helped build a crypto accounting firm, working with hundreds of clients. So people that just needed crypto tax reports, their 8949, Schedule D, all of that put together, used all the different softwares, including Summ, which used to be called Crypto Tax Calculator. So got to see how every software was different, how they all worked, which ones were good, which ones not so good. And now I am leveraging that experience to build Summ as the product and go-to-market lead. So that Summ is going to be, the standalone best software in the market.
Great, thank you. Thank you. So I just wanted to say that we can keep this, casual, like a fireside chat or podcast vibe, just to, have this atmosphere where our users watching the recording, they can just listen to the conversation and have some value that they can take away after it.
I think there are lots of confusion about what we are going to expect from the year.
Yeah, definitely. Happy to talk a little bit about the changes that we're seeing in the US as well as across the globe. I also have my colleague here, David Chapman, who's also with Summ, and maybe he can talk a little bit about what's going on in the UK. But here in the US, we have this new crypto tax form called the 1099 DA. For anyone that is used to receiving other 1099s like 1099B for your stocks or 1099 interest for interest, this form is very similar to those forms. It essentially is provided by exchanges like Coinbase. It's provided to you as the taxpayer as well as the IRS. It doesn't substitute your need to report your own transactions. And I think that's one of the big misconceptions people have about it. All it is it's just an informational form that tells the IRS, hey, this user did these transactions on Coinbase. And so what the IRS is going to do is look for that taxpayer to report those same transactions on their 8949, which is what they file, to the IRS themselves. So in short, in the U.S., the IRS is absolutely looking at crypto, and it's not a scary thing. It's just they realized, hey, there's a lot of transactions going on. We think it's important that they're subject to the same reporting requirements as stocks, and other financial assets. So those typical reporting requirements are just being extended to crypto. Going back to my experience doing crypto tax service work for clients, one of the big things that really caught people up was just not looking at their transaction history for the whole year, or maybe multiple years at a time, and then all of a sudden having to deal with tons of transactions all at once. Like, what was this trade I made back in 2021? And I can't remember what I had for breakfast, let alone whatever that trade was in 2021. So one of the best habits is to just check in frequently. If you're a very active trader, maybe once a week, look at your transactions, make sure that the software that you're using is picking up on those, like Summ, making sure it's categorized correctly. Or if you're a lighter trader, maybe once a month, maybe once every 2 months. But really just make sure you get your transactions into the software, make sure that those transactions are being pulled through correctly. And then you can forget about it. And then come tax season, you don't have this huge load of work that you have to do. It's something that can be done in just a couple minutes.
Yeah, and maybe in this particular context, you can tell us more about Summ, especially for those who are just starting their journey with the platform. So what is the story behind the Summ? What is the mission, and what's the platform actually doing?
Yeah, no, that's a really good question. So Summ is a data aggregator. It's more than just a tax calculator. Essentially, it's something that can track all of the moving pieces in crypto. So unlike stocks, where you buy it on one platform and sell it on one platform, most people in crypto have a few different exchanges, maybe a few different wallets, using CoinRabbit, for example, or some other DeFi protocols. There's a lot going on, and it can quickly get quite complicated. So what Summ does is it looks at all of that activity that's going on, and it tracks the cost basis from one wallet to another, calculates the taxable events for things like lending or collateral deposits and withdrawals, things of that nature, does all the tax calculations for you, and then prints out your filled out and ready to file 8949, which is the US tax form. We are in 180 different countries, so we have other tax forms as well, depending on the country that you're in. So we are really passionate about getting any and all type of integration added to our software, so that whatever our users are on, we can support. And then further to that point, we're not just a team of engineers, we're a team of engineers and accountants. So that's one big distinction from a lot of our competitors, where we have these crypto engineers who realized there was a problem and built a software. Well, we have that, but we also have people like myself, CPAs, who know the tax behind each transaction and can help advise and build the software in that direction to make sure that it's being accurately accounted for, which is really the most important thing when we're talking about taxes. We want to stay compliant. So that's where having a CPA and a technical engineer is really handy.
Yeah, I think that the question of rebranding from crypto tax calculator to Summ comes very naturally in this context, because I remember when we have started to discuss our partnership, you were like crypto tax calculator, and then I was very amazed about this whole evolution thing. So maybe you can tell us a little bit more about this rebranding, since growth is changes are always a great thing, but just curious to know more about all those things behind.
Yeah, absolutely. So the company Crypto Tax Calculator, which is now rebranded to Summ, that it was started in 2018 by our founder Shane, the CEO and founder. And really, it was a personal project where he was fed up with trying to do his own crypto taxes, kind of like I mentioned, doing all this activity, no idea how to handle the tax side. So as a developer, he decided to just vibe code his own crypto tax solution. And once he realized that this crypto tax solution was really quite valuable to a lot of people, he wasn't focused on the business side of it, and he realized, okay, crypto tax calculator, that name hasn't been used yet. Let's keep it simple. Let's just go with that. So he named the company Crypto Tax Calculator. That's exactly what the software did and still does. But as the company grew and evolved, we do more than just crypto tax these days. We're an accounting software as well for businesses. So if you have QuickBooks or Xero, you can actually do your journal entries within Summ and then port those over to QuickBooks and Xero. And then also we're a portfolio tracker too. So as our company evolved and grew, we thought it was appropriate to maybe grow past that crypto tax calculator basic name into something that is more recognizable, a true brand name rather than a generic name like crypto tax calculator. So that's how we landed on Summ.
And maybe you can elaborate on the very choice of the word Summ. Maybe there is also some story about it.
Yeah, well, it's kind of a play on words. Summ, like addition, SUMM. So we are an accounting software. So we are aggregating data. We're doing calculations. We're helping with the accounting process. So we thought it was an appropriate word to kind of classify what we do, which is more than just tax, more than accounting. We're a data aggregator and a portfolio tracker as well. So really wanted to get a name that kind of just encompassed all the things that we do. I would say the mission of Summ is to bring clarity to on-chain transactions. The accounting clarity is really the backbone of businesses, of countries. It's a very important piece to any successful business or any country, and taxpayers as well. Having an accurate paper trail of what the heck went on in your finances is really important. And so that is the general mission of Summ. So as I mentioned, we have this new tax form, the 1099-DA, coming out. And so, as I mentioned earlier, this isn't a replacement for the taxpayer's obligation to file. And it's also going to have a lot of missing data in it as well. I won't bore you with the details, but the 1099-DA won't actually have cost basis included. And so what we're going to do is we're going to make sure that we ingest that 1099-DA to make sure that the data that we're providing to the IRS on that tax form is aligned with what they're seeing on that 1099-DA. And then we're going to fill in the blanks. So all the cost basis that's missing, any discrepancies, we'll make sure that we're filling in the blanks. You have a paper trail of how you arrived at your tax calculation. We'll make sure that the user is not overpaying on crypto tax, which actually happens quite a bit if you aren't using a tax aggregator. And really that's a primary focus for this US tax season. Beyond that, we are continuing to improve the product, the speed of the product, the efficiency. We're continuing to expand our integration. So that 3,500 number might be 4,000 within a couple of months. Who knows? But yeah, continuing to make it easier to use, easier to understand, tracing all of your data, give you more insights like tax loss harvesting as well. As a CPA, I'm a big fan of tax loss harvesting, selling, identifying assets that are underwater, selling them to realize the tax benefit. So all of these tools will be implemented into Summ to allow the user to make better tax decisions and have more financial clarity over their crypto assets.
Thank you so much for this detailed answer. And maybe after discussing the Summ's mission, I wanted to touch upon your personal journey to know more about your personal mission. So maybe you can share us what are those particular exciting things for you that led you to this whole field, and how have you even ended up in this very, very complex landscape of crypto taxes?
Yeah, definitely. That's a great question. I touched on a little bit of kind of my professional journey, but as I mentioned, I started in crypto in 2017. Was just kind of messing around with it. Started playing, with trading bots and DeFi and all that. So I understood the complexity of it, and then I really began my career at Ernst & Young. Really, really tough job. It was great. It's a meat grinder of a firm though, so you're doing a lot of work, not a lot of time for personal, playing around in DeFi, things like that. So I kind of laid back a little bit. The taxes were complicated. But then I decided to help out and build this crypto accounting firm from the ground up. And so I taught myself everything I needed to know about crypto tax. I have my CPA, so I was able to kind of leverage a lot of that experience. Everything I needed to know about crypto tax, built out the SOPs, built the team, trained the team on how to look at crypto, how to handle crypto, how to identify any missing gaps, and then really made quite a successful company there. Now, once I got to that point, I realized I had a lot of experience with software and dealing with all the different softwares out there. I wanted to leverage that experience to help really make one software amazing, and that's how I ended up with Summ. So taking that experience with hundreds of different clients, took it over here to Summ, making sure that everything I hated about other softwares, I'm getting fixed within Summ, so that we can be the best.
Yeah, and I'm just curious, apart from the experience and background and knowledge, how do you think, what are the your personal characteristics that help you to be successful in this particular field?
Yeah, no, that's a great question. I would say a lot of it is the forensic mindset that I developed as an auditor at Ernst & Young, a financial statement auditor. So not a tax auditor like the IRS, but a financial statement auditor. Really kind of looking at the gaps, trying to see what's missing. And really that's actually the biggest problem that most users face when trying to do their crypto tax is having missing data. Maybe you've used 10 different wallets and you only imported 7 of them into your tax software. Finding that missing data is really important, because we need the full picture in order to provide an accurate tax calculation. And so that forensic mindset is really kind of what made me excited in that service work, because it's kind of like a puzzle. It's like you're finding the missing pieces of the puzzle, using the negative space of everything else that's imported into the account. So that was really exciting for me, taking that experience here into Summ, making sure that we're actually servicing missing accounts to the user. So when you import your 7 out of 10 wallets, we'll actually be able to tell you, hey, we think these 3 wallets are actually yours, and then encourage the user to import those. So it's really quite a fun problem to solve, of how do we help the user find the data that's theirs that they forgot to import. It's a really complicated problem, but it's quite fun to solve. There is one clear standout of the #1 problem that if you only did one thing to help with your crypto taxes, this would be it, and it is add all of your data. I know I just touched on that, but get all of your data into the tax software, because the tax software will do all the heavy lifting. Once you bring the pieces to the table, the tax software will put it all together. But if you don't bring all the pieces to the table, the software can't do anything. So even if you no longer use an account or a wallet, maybe you used it back in 2022, it's still important to add, because you might have purchased an asset in 2022 that you're now selling in 2025 or 2026. So we need the cost basis for that. So the #1 thing that any taxpayer can do to have an easier time with their crypto tax filing is get all of the data into the software. If you do that, it's a complete breeze. The software will put it all together. If you're missing data, that's where the recommended accounts feature within Summ comes in handy, because it will say, hey, we actually saw you interacted with CoinRabbit and you don't have a CoinRabbit import into Summ. Maybe you should go get your CoinRabbit data and import it into Summ. So that feature alone is quite valuable, because frankly, like I said, I don't know what I had for breakfast this morning. So, how am I supposed to remember my 20 different DeFi wallets, all these exchanges? So that's where Summ kind of helps identify what you might be missing and then encourage you to go get that data.
Yeah, thank you so much. And how do you think, is there any perfect timing of starting to use crypto tax software, or it is very, very recommended to do from the very day one?
Yeah, that's a great question. So if you haven't imported your data into a crypto tax software, I won't lie to you, the first time's probably going to be a little bit painful, because you're having to get all of those accounts, all of those wallets. I used to call this the archaeological dig, because you're really getting everything, going back several years potentially. That's the most painful part. Once you do that, it's a breeze. Once you've added all the data, anytime you have a new account, boom, you just add in that new account or that new wallet. Super simple. We also can connect to API for most exchanges and wallets. So instead of having to chase down a CSV each time, you can actually just hit sync, and then it's going to pull in via API all of that new data. And so once it's in, you can forget about it. You can just hit sync next time you come back. And then to your point, Irene, the easiest thing to do after that is, depending on the frequency of trading, check back maybe once a month, once every 2 months, or if you're a high frequency trader, maybe once a week, and just review any new transactions to make sure that the software has picked up everything and properly classified it.
Yeah, thank you. And maybe here we can touch up on the very flow that CoinRabbit users, yeah, I think we have a hand raised. So yep. I think, yeah, we can answer the question. So yeah, please, Abel.
Yeah, so basically I just had a question. If you can touch on at some point, it doesn't have to be now, but like the just on the security side of connecting your account. I don't know what that looks like or entails, but if you can just touch on that a little bit. Thanks.
Yeah, absolutely. That's a very, very fair question. So when it comes to wallet addresses, it's just the public address. So it's not, it's obviously not your private keys or anything like that. It's just the public address. So like you could go on Etherscan, for example, and find a bunch of public addresses. Similarly with the exchanges, if it's a connection via API, then it's a read-only API. So obviously there's no way for us to affect any trades on your behalf since it's a read-only API. But then all this said, there's always the CSV import option. So if you're highly private, highly skeptical, you don't want any data exposed, no problem there. You can always import a CSV, which would essentially have no connections via API. And then you can continue to get your data that way. We also do have certain privacy compliance certifications like ISO 2000 something, I forget the number. We also have SOC 2. So a lot of these standard security and privacy certifications we also have. Yeah, absolutely. David, I know you're in here. If you want to speak a little bit to the global landscape here.
Yeah, sure. Thanks very much. So hi everyone, I'm David. I also work for Summ. I am not a CPA, so I'm not as intelligent as Justin is. And I certainly can't go into the sort of detail that he can in terms of returns. But just by way of background, so I've in one way, shape or form worked with tax authorities around the world for about the last 25, 26 years. You mentioned at the beginning, Irene, about how tax authorities were now using solutions like Palantir. So way back in 2004, 2005, I was selling what was the equivalent of Palantir at that time into tax authorities for counter fraud purposes and that kind of thing. And that continued up to 2020. So I've got an understanding of how their systems work, how intelligent their systems are, and the sort of things that they look for and they can pick up. And then my previous role before moving to Summ last year was actually with TRM Labs, which is blockchain intelligence. And a lot of tax authorities are using, whether it's TRM or Chainalysis or one of the other tools on the marketplace, to be able to do more in-depth investigations into blockchain transactions. But from because I look after Europe, Middle East, and Africa, I'm not going to comment on the US side of things. Justin is far more qualified to do that. But at a very high level, the sort of regulations that you're talking about, sort of there's CARF in Europe, there's MiCA, or market in crypto assets, and various other things that we're now starting to see come through from a regulation and lawmaking perspective, is basically because governments have woken up to the fact that at its peak last year, crypto, the total crypto market was about 4.2 trillion, roughly. It's obviously fallen away from that still today, but I still think it's about sort of 3.5 trillion, something like that. And they recognize the fact that those are taxable assets that they haven't really focused on in the past. And so every government around the world, pretty much, apart from your Monacos, your Singapores, Dubai's, those kind of regions, are now sort of focusing quite heavily on the crypto space and the crypto arena in terms of ensuring that they have the regulations in place to tax it in a fair manner. And we actually do have conversations with tax authorities around the world that are looking to do that, because they come and ask for our advice about A, would this regulation work, and B, is it actually then possible to, technically possible to see if, people are abiding by it or not abiding by it. So the focus on crypto is huge. And they are also seeing that there was a report by the European Central Bank that came out last year that showed in the EU between 2022 and 2024, the amount of people holding, transacting, or having any kind of crypto investment actually doubled across EU member states, which is probably the largest and fastest growing area of potential tax revenues that any government around the world is ever going to see. So there's reasons why they are now sort of focused on it more. The US is implementing the sort of the DA 1099. Did I get that right?
1099 DA. Yep.
The UK is implementing something very similar for the next tax year, and other governments around the world are probably going to follow suit in a similar kind of thing in terms of having to have specific reports from people, and they'll be able to match the reports they get from the exchanges to whether an individual taxpayer or an institution has reported crypto on its tax return. So their capabilities in this space are good at the moment, but they're only ever going to increase and get better. I mean, we did a survey, I think it was about 18 months ago. We did a survey of users, or not just users, but people who had crypto assets. And it was something like 83% of people with crypto assets thought that tax was only payable on exchange transactions, and that DeFi was in some way, shape or form exempt. Sadly, that's not the case. And like I say, and capabilities obviously vary around the world. And I'm not saying that any government is going to have the capability to have 6 or 7 petabytes of transactional data on all of the different blockchains and all of this kind of stuff, and have computers that can process it and understand that Justin has made this trade on a particular time on a particular day. But they know that, I think DeFi, if I remember my last numbers correctly, and Justin, please correct me if I'm wrong, but DeFi accounts for about 50% of all crypto trades. So, they know that's a large piece of the pie, and it's definitely something that they are. Some are more advanced than others. US, I would say, is definitely more advanced, but it's not, I would say, a safe space anymore. I don't really think there's a safe space in crypto anymore.
Yeah, to add to that, just to put it simply, and this is not to scare anyone, but to put it simply, the same way that Summ can look at your transaction history and say, oh, it looks like you have this account, or it looks like that you have that account, the government can do the same thing. It's a public blockchain, it's a public ledger. You can see every movement, every asset. You can build a web of wallets that are interconnected. It's fairly easy to do that. And then further to the new regulations in the US, with the 1099 DA, wallet addresses will not be reported on the 1099 DA, but exchanges are required to preserve, send and receive wallet addresses for up to 7 years. and then if requested by the IRS, are required to hand over those addresses to the IRS. So if the IRS came in and said, hey, Coinbase, we want you to hand over the send and receive addresses that Justin has interacted with on and off of Coinbase, they would hand over 7 years worth of addresses. And then from that point, more or less, the IRS would be able to build out a web of wallets that they believe would be mine. So to your point, Irene, you're absolutely right. I've talked to hundreds of people about like, what do you really care about when it comes to tax? And what you said is spot on, just to do it right. I'm not trying to dodge tax. I'm not trying to, commit tax fraud or anything like that. I just want to make sure that I'm navigating the environment correctly, staying compliant, obviously not paying more than I have to, that I'm legally required to. And that's precisely what Summ is doing. We're ingesting that 1099 DA. We're making sure that our data it matches with the DA, so that whatever the IRS is seeing is consistent with what we're reporting on our side. And then we're filling in all the cost basis gaps, reporting all that DeFi activity into one ready to file 8949 report, so that it's ready to go. You can take that, put it into TurboTax, or hand it off to a traditional tax preparer, and then they can file that away. So that's precisely the problem that we've solved here. So the one strategy that I always preach about, especially near year end, is tax loss harvesting. And for those that don't know, tax loss harvesting is simply the practice of intentionally selling an asset that has gone down in value to realize the tax loss. So then you can offset any other gains you have, or even reduce your ordinary income by up to $3,000. And so why this is super important and often overlooked to crypto users is, even with myself, we're making a bunch of trades. Maybe you buy some meme coins and they just absolutely crash or something like that, and you just totally forget about it. You're like, oh, I'll just hold on to it because maybe it'll go up in value someday. And so what you've done here is you've bought it way up here. Now it's way down here, and you haven't sold it yet. So you actually haven't realized a tax loss. And so you're sitting on a bunch of unrealized losses that could be used to reduce your taxes. So tax loss harvesting is something I always advocate for, especially near the end of the year. Take a look at your assets. You can use Summ to do this very easily. Look at your assets, look at what assets might be underwater, potentially sell out of those. And then the secondary strategy to this is the wash sale rule does not apply to crypto as of 2026. And so what that is, essentially with stocks, you have to wait 30 days before you can rebuy an asset for that loss to count. So you can't sell an asset and then rebuy it within 30 days. Otherwise, that loss won't count. But with crypto is property. It's not a security. The wash sale rule explicitly applies to securities. And so by nature, you don't actually have to wait those 30 days. There is one caveat here that I will call out. Again, I don't want to bore anyone with the technical side of this, but you have to be cognizant of the economic substance doctrine, which basically states if a transaction is made purely for the purpose of dodging tax, the IRS can wave a magic wand and say, no, that we're going to disallow that. So the kind of recommendation here is make sure that if you're selling out of an asset and buying it back within 30 days, it's, for portfolio rebalancing or anything else, you just can't say it's strictly because I wanted to harvest a loss and then immediately rebuy it. But there's a lot of ways to justify that the transaction had economic substance. So that's one strategy. The second, Irene, that you alluded to is using crypto as collateral rather than selling the crypto and realizing capital gain. You can use it to take a loan, so you can get the liquidity without actually triggering that capital gain event, which is often used with traditional assets as well. Especially for highly wealthy individuals. But services like CoinRabbit make it super easy to actually take a loan using crypto assets and not trigger that capital gain event.
Yeah, and I just think that this whole partnership and collaboration, and its mission is simplifying this whole experience of managing crypto and staying ahead of everything what is going on in this very, very fast changing space.
Yeah, it's constantly evolving. Everything is it's an iteration after iteration, and especially on the software side, we're constantly playing catch up as new blockchains come out, new exchanges come out. We're trying to make sure we have integrations for them. But that's exactly it. We want to make sure that we're working together. You're providing an amazing service for users to transact with loans and whatnot, and we want to make sure that that's properly tracked within Summ. And so that the taxable activity is accurately reported.
Thank you so much. And I just think that we have one question left. So I'm just curious whether you can share some practical tip, not like rule number 1, number 2, but just some friendly reminder, friendly advice for our users to simplify taxes for this year.
Well, besides the obvious, which is use Summ, I would say gather your data, gather your wallet addresses. Even if you're not ready to get started with the tax software yet, it's really important that you aggregate all that data. Just jot down on a piece of paper what exchanges you've been on, what wallet addresses you might have, and then if you do get on a software, as I mentioned earlier, just a regular habit of checking it maybe once a month or once a week to make sure that any transactions you've made are being accurately reflected.
Thank you so much. And yeah, actually we have touched all the questions that I have. So I think it's time for us to finish our session. Yeah, maybe Vita wants to say something.
I was listening so carefully just because it's very interesting to compare it with what I'm hearing from our private clients who I usually talk to. And actually they say that with all these changes, with all these restrictions, it's almost impossible just to outright non-reporting now, and you just have to find out some other ways to minimize it in legal way. So basically, when you mentioned the most common thing is, I guess, tax loss harvesting, and also some kind of tools like buy, borrow, die strategies, and mostly like you just have to know the best tools to use and the best practices that are going to save your time, your nerves, and capital. So basically, thank you for these insights, and I guess we just gave our users like the understanding that there are actual solutions to these problems and they can sleep better tonight, I guess, knowing this. So to close this out, I would just say that you don't have to let tax anxiety paralyze you based on these kind of upgrades, these new legal things. The worst thing you can do is just to ignore it. So you just have to face it. Yes, just to use the best tools. And now you have a partner, Summ, who can just help you to cope with this complexity of the tax from the past, and CoinRabbit to help you to manage the liquidity in the future without triggering unnecessary tax events. So I guess this is a great collaboration here, and I guess that's pretty much it. Thank you, Justin. Thank you, David, for these insights. I guess our conversation was pretty fruitful, and from my side, that's also it.
Yeah, thank you very much. I mean, you nailed it there. What Summ can really do is give you clarity over what transactions happen, because like you said, most of the time it's like everything is just highly confusing. You have all these trades, you have no visibility over what the heck is going on or what positions you hold or what the tax lots are. And that's what Summ does. It gives you full control, full clarity of what's going on, so you can strategize like tax loss harvesting, or gifting crypto, donating crypto, things like that are also good tax strategies. So you don't really get that clarity if you don't use a tool that can really get granular and tell you exactly what's going on. So thank you both very much for having me and David on, and we're really excited about this partnership.
Yeah, looking forward to see the full integration. Like, I guess that would be pretty cool actually to have this, smooth flow, and that would be great for sure. And once again,
Absolutely.
thank you so much for this conversation, for the insights.
Thank you very much.